let's just start again real quick. Hi friends, Ankr, doing pretty well, A-N-K-R. Is this actually pronounced Ankr? Yeah, Ankr, it's pronounced Ankr. Great, let's take a look at Ankr versus USDT. We've got some fantastic profit-taking targets coming in up above. Couple of big warnings for us. You know, we could even go as low as 9 cents. Lots to cover in this episode. Let's do it real quick. Thanks for joining me. My name's Rocky Outcrop. Like sub, all that stuff. Here's a taste of some intro clip for you. Like doodle-loo-loo-loo, doodle-loo-loo. Look, at my name would appear here and everything. Great, let's just crack on with things though. Right, so moving on the way, what we have is a lovely big upward trend, drawing in a Fibonacci to express this overall upward trend. We can see that the 236 point, which is where you would say this has become valid at, is at the 200 simple. Therefore, in terms of really any time frame you're looking at, but especially right here in the 4-hour time frame, if we break down past the 236, we could be looking down for some problems. In fact, we'd be going down past the 200 simple period moving average, breaking a good deal of market structure, and I'd actually say that you could be going down as low as, and now don't try not to kill me here, 0.17, so less than 2 cents, as in a 90% drop off in price action. 90%. Could it happen? Yes, it could, right? That would be end of bullish market phase, right? And remember, the trend is your friend, okay? So on that basis, let's just sort of bookshelf what I just said there now and move on with the actual trend is your friend chat, assuming of course that the trend stays our friend. And that's why I said we could be looking down to sort of 8-9 cents. If we actually go down past that 9 cents level, then of course the trend, we have to ask some serious questions, you know, trend, are you still our friend, right? But anyway, so as things go, pretty good. Now what we've seen recently is a 30% drop off in the price. I know 30% seems like how could that be 30%? Well, this is a logarithmic chart that I have open, ladies and gentlemen. Looking between that high and that low, you can see the prices actually did drop down 30%. So we've done significant stuff right here, right now. Are we in the mood for turning things around? Well, maybe we've burnt off the any potential for bearishness on the moving averages. Let's sanitize that. Yes, we came in here very high in the MACD, needed to pull back down the way, did. Came in here very high in the RSI. Was it slightly bearishly divergent? Sort of class B bearish divergence? Not really, but just up here. And we did great. Had that bit of a rejection candle just there. Lovely. Pushed down the way. Fantastic to see, and put in a low overall here with what is the most beautiful hidden bullish divergence that you have here, ladies and gentlemen. So that's wonderful to see. If we see the prices then continue to go up the way, they're benefiting with the blast off effect of perhaps some hidden bullish divergence. It's not there on the RSI, worth pointing out, because the RSI is going to maybe be positioned as sort of king of divergence indicators if you use it correctly. Maybe not for everyone, but what you're seeing here as well is the bullish trend is absolutely fantastically still on. Little bit of hesitancy here though, when I want to point out the fact that there is this bearish divergence here. Make this red maybe even so it's more obvious to you. This red line showing us the bearish divergence we have on the DMI. If we want to push up the way, then what we need to see happen is taking out 19 cents, and then of course we've got some good targets up above. We'll cover them in just a second, but we really need to see things not kind of tag down the way. If they do, there's other targets in line. The stochastics you can see here in this time frame just showing us that they're turning around now. If we do go down the way, then of course, like, we've got some other targets, and we'll just express them quite briefly real quick for us just here, because they're actually coming in down here at 13 cents and 12 cents. 11.5 cents is your best buy, really, if you're looking at this over the period of things kind of playing out negatively. Now, they don't have to. That's just a warning sign for people that's just out there. Things are looking really quite good, quite strong overall. Just the fact is that that's the way those are positioned. On the 24-hour time frame, for some sanity here though, we could be about to cross it back over the way in terms of the stochastics there, and of course where things are flying here with the DMI high. Now this is obviously as high as it's ever been. You know, that's quite probable. We have had a pullback. What we're waiting to see is if this actually results in the prices then being able to continue up the way, having had this opportunity to burn off some of that divergence possibility that we're seeing there. So there's a good chance of that. And that means that we've got higher up targets. What are those higher up targets? And there are these three numbers in this zone here, between the 1.2, the 1.4, and the 1.6 extension points in this Fibonacci. And you're talking 24.5 up to 28 cents. Okay, 24 to 28 cents is our next profit taking targets up the way. That's a huge move up. That's our next target still, ladies and gentlemen. So things are obviously in this state of high risk, risk, high reward. Okay, and that was what I mean by high risk and high reward. Is it's going to have to sanitize any moves we do with looking at these moving averages just now. As you can see, chances of us testing off the 8-period exponential moving average, that yellow line, very, very, very easy to see it happening, but it's not happened quite yet. 4-hour time frame, you can see then that there's more propensity for these things to cross. If we see a crossing of these and at the same time us moving down below the 50 simple period moving average, then things start to look a little bit more risky for the potential for another move down the way, taking out those targets I spoke about down towards, perhaps giving you that best buy entry at around about 12, and then of course, or 9 should you be looking down there. That's when things start to, you really start to, like, if you're not considering shorts, etc. at these points, then you're trading just one-sided on the market, I suppose, and that's fine. Cool, excellent. Like, subscribe, they help an awful lot. I really do appreciate it. I'm tuning on with the rest of the show. See ya. Did I tell people during that there was a live show? I don't know. Maybe I should have. Hey folks, there's a live show. I'm actually doing one right this minute. Check it out. Live show. Cool. So that's that. Hi Phil. Nice to see you, Phil. Good to have you.